All right. Good morning, everybody. So after yesterday's, nice expansion near the open, today is completely the opposite as we get closer to the open. Sorting these in order from high to low, Hong Kong is still down, but the U.S. markets are also down. We have the NASDAQ down the most, S&P behind that, and then the Dow, and then the small caps, the Russell. Kind of implies that those value names probably doing a little bit better than the growth names. We're still watching Hong Kong for any kind of stimulus. There was news that the president is out of the country. He went to Russia. That's the Chinese president we're talking about. And Apple today is going to be unveiling that new Wonderlust event is today. So they're going to be popping out their new iPhones, and there's going to be a lot of talk about Apple phones and China. So it's definitely worth keeping your eye on in that space. We'll see if China backs off a little bit on the harsh rhetoric that they're putting out on Apple. A little bit has to do with Apple ramping up production in India and backing off of its production in China. China doesn't like that, so now they're getting into a little tiff, banning the phone from government offices and things like that. But it's a little bit of back and forth. We'll see if one side capitulates or not. It's certainly worth keeping your eye on. We had some moves in Bitcoin in the overnight too. We'll see as we get into the charts. We do have some Bank of England speakers today. And there is this SEC testifying on Bitcoin, but it's a tentative schedule, so we're not quite sure when that's going to hit. They don't have it highlighted as very important, but we get the 10-year auction today at 1 o'clock, and that one's a really big deal. To me, it is. We're not supposed to say that. We're supposed to think that all of them are a big deal, but we get our favorites. That 10-year is one that I pay particular attention to. You're going to want to watch the clock today as we get around 1 o'clock, and we're still in the expectation that it's a hurry up and wait situation. We really want to see how inflation is doing through these CPI numbers. And so, the market's not going to make really big changes to its stance until it has those numbers, which puts us in this situation where we're all just sitting around waiting for it to come out, and that's tomorrow. I believe it might be Thursday. Let's see where this thing is at. Yeah, it's tomorrow. CPI tomorrow. PPI on Thursday. So we still have that expectation of we're not going anywhere. It means we sell into strength, we buy into weakness, we expect breakouts to fail, and we just expect to really hold the line until CPI. Really think I broke something in there. So Thinkorswim is doing their migration this week with the Schwab accounts. You might have seen it yesterday, the just complete lag of the Thinkorswim charting system. It's not on your end if you're having those issues, it's on their end. It seemed like they caught on to the fact that they were screwing everybody up and quit doing it, but the damage was already done. Half the day, the charts were just trash. So they would just sit there blank trying to load, and you try to change symbols, it would take anywhere from 10 seconds to 1 minute for the chart to update. We're still in liquidity risk when we consider the scope of volume in the overnight hours. There's still a lot of rolling going on. If you trade in the futures, you should already be on the December contracts. All right, so make sure that you're rolling into the most liquid of the contracts. We can see that the U series is still here, right? ESU, it's the September series, has 141,400 in volume, and the December contracts have 198. So, it's not an extreme difference yet, but the week is still young and it's going to get wider as the day wears on. So you're going to want to, stay in what's liquid. We are looking at a market maker move. So it's worth keeping in mind as well, right? But I don't think that should be there. Looking over here, the front isn't higher than the back. So this market maker move is probably reading this one that hasn't been taken off yet. So we can see that market maker move here on the chart. Just keep in mind that we don't trust that, right? That it doesn't have any weight for us. It's very likely just a part of the whole contract change and everything else that's going on. Always check your tools. We are resting on that 10-day moving average. We got through it yesterday, managed to hold above it. It's interesting to note that the 20-day moving average is also right there. They're side by side. So we got the 10 and the 20 right underneath us right here. Now, while we don't consider moving averages support or resistance, you've got to really kind of put this into some context, or just what it would imply if we can't hold above that level. All right, so like yesterday when we got down below it, as long as we closed above it on the daily, that's what mattered. And yet here we are again today, right back down on that level, fighting to get through it again. So we need to hold this level, right? Think about it from a daily chart perspective. If we closed above it yesterday and then today we closed back down below it, everybody's going to look at that as a 10-20 rejection. And we'll be underneath those major moving averages. So it's kind of a line in the sand. It needs to hold this, but the entire market is in transition. It's the most dangerous time to try opening new positions and adjusting and beginning to focus on new entries right before a big FOMC event, CPI, and the pattern and the shape that we have. We're not at the high, we're not at the low, we're literally right in the middle. This thing could go either way, and it's a wide enough range that you could be wrong and you wouldn't even know it until it fell out of the bottom, or if you're short, you wouldn't know you're wrong until it broke out of the top, because it can go anywhere in the middle of that and you still wouldn't know which way it's going to break. So if you're not in positions yet and you're looking for new positions to get into, maybe wait for this thing to break above or break below, and or wait for FOMC, CPI, PPI. So we are above the 10-week and all the other major moving averages on the weekly. It's just the daily that we're really interacting with right now. We talked about that snow line yesterday. It's one of the voodoo lines, 45.38. We managed to get to that level multiple times, but we weren't able to hold it and keep it. So that's now going to be the line in the sand that we have to get through for any move higher. Now, we've been talking about gamma levels and zero gamma and IV measurements. I use the 21-day ADR. That's what these red lines represent. But half of that is really where the spot gamma level comes in. And it's around 0.65%. It's not perfect. It can be 0.60, it can be 0.68. But when the S&P travels that far, near a 0.70%, then it starts to get into the level where they're likely to monetize their options. If we went down, they'll be monetizing their puts to flip it over and come up. And if we went up, they'll be monetizing those calls and then flipping it over to come back down again. The thing is, every once in a while, they decide, let's really press this, and short will continue to go short, or longs will continue to go long. And that's where we start to get one of those big blowout, rip your face off kind of days that look like this back here. When we traveled that 0.67% and we paused there when they considered monetizing those calls or not, and then just said, let's press it. And they kept going. So every day around that lunchtime zone, you really want to consider, have we made that move yet? That 0.60 or maybe just 0.75%, right? To keep it easy to manage. Have we made that distance yet today? Up or down, it doesn't matter which direction. Because if we haven't yet made that move, then you could consider it unspent powder, right? Or a gas tank full of fuel. They have the energy and the capacity. They have the means and the motive, right? Watch enough TV, I'm sure you've heard that one before, that they can then still make the trip in the afternoon very easily, no problem. Kind of see an example of that here, where we chopped around and we didn't really make that move. So then when it finally did go, it went right to the ADR. That ADR isn't showing up now, but that day, that's where we went, it's the ADR. So when you're thinking about what options to trade and cheap plays that you could do with options, is considering, the cost of a butterfly on those ADR lines on the intraday basis. What would it cost you to put, a butterfly on in the SPY or the XSP, avoiding the SPX, just because, those things are costly? Probably wouldn't cost you that much. Butterflies, when they do hit, they pay out really well, and they're really cheap. So believe it or not, even though it's one of the most highly speculative plays and it loses a lot, butterflies, have like a 20% win rate. They are considered a great strategy for small accounts. Something to think about. So with this hurry up and wait that we're sitting in here, those ADR levels right now are the focus. We have every reason to believe that we're going to stay inside this range. And that is the range, 45.60 to 45.11. It's a nice, tight 50-point range. Very boring, very choppy, very dangerous. It's going to be a lot like yesterday. Now, I can be wrong, trust me. Okay, so the base case argument here is that we're just going to hold the line. If I'm wrong, we're going to explode and travel like a rocket ship. It'll look very similar to Wednesday. or to that other day, this Tuesday back here. It'll look like one of those. Because if we do start to go and we break out of this tight little range that we're in here, it's going to catch a lot of money off sides, and they'll be scrambling to cover, and then we're really going to see some people getting squeezed. But that's not the base case argument. The base case is we're just going to hold the line today. It's going to be very similar to what we had yesterday. And if you didn't like yesterday, I'm pretty sure you're not going to like today either. Now, I've had people say, gosh, I got tore up yesterday. It was so difficult. Looking back, I should have just avoided the whole thing. Well, you don't have to look back. If we're inside of this range, you're going to find it difficult to trade. So I'm not telling you that you can't do it. I'm not telling you that you shouldn't do it. I'm just telling you that if you thought yesterday was bad, you could have avoided getting chewed up yesterday. And all you had to do is wait for it to get out of the range. When it never got out of the range, you never got a trade, you never got tore up. It would imply, and it does imply, that there would be days where you don't get a trade. Oh my goodness. Can you imagine? 10-day, 30-minute volume profile. When we're at the lows, we expect to go to the highs. When we're at the highs, we expect to go to the lows. We're underneath the point of control. We do have that classic B shape, and we are trying to close ranks and get back to the point of control. It's interesting how we were able to move through this shallow zone both times on the move up and back down. And yet this time we're really struggling to get through that shallow zone. And it says a lot about this area. Maybe it says a lot more about the correlated or inverse market that we're playing against, but either way, that 45.50 is where a lot of money is resting. And it's really hard to see the market getting through that zone when, you know, big money is sitting there monetizing every time we get anywhere close to that. They're holding on to a lot of junk that they need to get out of. So when we come up and give them that opportunity or even get close to it, they're snatching a hold of it and dumping it. Mapping out the 5x5. We have a point of control above us from yesterday. $45.39 and a tick. Remember, that's not support, it's not resistance. It is where the greatest amount of transactions happened yesterday, the greatest amount of volume at that price. That's it. The expectation is that if we get back to that level, if there's any unfinished business, they'll take care of it at that point. If there's anybody who, you know, buyer's remorse, they're going to deal with it there, right? So unfinished business, we expect a reaction at a price when it gets there. It's in an area where, you know, an area of interest, however you want to say it. Unfinished business is generally how I like to put it. We do expect a reaction at a price when we get back to that level, and we will get back to that level eventually. So we're starting to get a little bit of a breakdown here. We just got a new low of day. We got some key pivots underneath us that are worth kind of keeping your eye on. Yesterday's intraday low and then yesterday's low. They're two different things. Both of those pivots are worth marking out, and the ADR half at 45.11. It's a cog line. There's a voodoo line at 45.14. So all of those are levels worth considering. There's a big gap between where we're at now and that voodoo line. And the only thing in that gap is that spot from yesterday's intraday low. So a breakdown at this point is going there. That'll give us this really nice double bottom. Remember, double bottoms are a bear trap. So liquidity resides on the other side of the pivot. We would expect price to go through that line and into the other side. Somewhere right around in there. It's supposed to be convincing enough that bears pile into the trade thinking we're really going down now. That way they can spring it on them, rug pull, and flip it back up. I wish I knew that, Jeffrey. It's a good question. Somebody asked about the voodoo lines. It's one of the reasons that I don't trust them. They are hand-drawn lines, and the person who hand draws them has a little bit of Elliott wave in them, some fib levels in them, and it's just this hodgepodge of things. And they won't explain how to replicate the process. Those voodoo lines come from simpler trading, and that's where you can access the indicator from. But you have to go back and get updated voodoo levels like quarterly, so that they last for a while when you have them, but you still have to keep going back and getting a new updated level. And I mean, that just makes it hard to trust when you can't replicate the process. But I continue to have them on my chart because price continues to respond to those voodoo levels impressively so. Like back here, that purple line there is a voodoo line, and that green line right there is a voodoo line. Now, granted, that's 4,500, so it's not like, oh wow, that's a surprise. But that 44.74 with this voodoo line down here, impressive, right? So it does continue to amaze me, but I have no trust in them, no faith. I keep track of them, and I use them for areas of interest. Good question, though. With this hurry up and wait across the board, we really don't have an expectation of anything doing good today. I did come out with an indicator yesterday. It's not mine. I just built it. So I was reading this book by Gerald Appel. He's the guy that came up with the MACD indicator, right? So he's been around for a long time. And in his book, he was talking about different indicators that you could build. And it was an older book. So in the time frame that it was written in, the data that he was talking about in the book would have been hard to get. But in the world that we live in now in 2023, the data that he's recommending using is very easy to get. And one of the things that I built yesterday was a momentum indicator. It's all based off of how he said to build it in the book. So I can't take any credit for, coming up with this amazing indicator, but it is pretty amazing. It's just momentum for swing trades. I think, though, that it can be used for day trades. He didn't use it for day trades. So anything I build for using it in day trades would have to be done on, my own work. The point behind that, though, is that we can assume that there's momentum in a market, or we can measure that momentum, right? I can cut wood without a tape measure, but I can be precise when I do use a tape measure. So this Momentum indicator is in the Thinkorswim workbook. I don't sell indicators. I give them away. So that's where you'll find it. There is a Thinkorswim and a TradingView version for those of you that want it on TradingView. And that'll be great when we get it for day trades. But right now it's not designed for day trades yet. Bitcoin is up this morning, so while everything else is in this hurry up and wait mode, we could expect names in that space to give us some opportunity, perhaps coin or yeah, coin's up. So we're focused on coin getting an inside week breakout, 82.69, and then an inside day breakout, which is basically above 83.25. That'll be a nice move for coin. If we look at it on the weekly, we've got this amazing TRB setup that never followed through, right? It got rejected on that 10-day, but we're now pinched and trapped between the 10 and the 20, resting on the 50, all of that a weekly time frame. If we can get above that 87, what is that? 86.50. If we can get above that, we will go to 100. And then, maybe that 810, or excuse me, 110, 115 area. There's someone much smarter than me that talks about if 80, then 100. And if you were to Google that phrase, it's actually a thing, right? There's a lot of analysts that say, once it gets into that 80 zone, and there's a lot of reasons behind it, but once a market starts getting past that 80 zone and starts creeping towards 100, it's almost, a foregone conclusion at that point that it's going to go to 100. But that's usually, like the first time a company gets in that. But it is a real thing. If 80, then 100. And we can say that on coin this morning. If 80, then 100. Just keep in mind, that was said back here too. And, it got to 86.50 and it fell back down again. So just kind of keep that in mind. This will be the start of a really nice breakout with a TRB and a move to 100 and then 110. It's just got to get going. And it's not just coin, right? If it was just coin, this wouldn't be good enough. But Bitcoin is moving, so its proxies should move, like Riot, Mara, Coin, Hut, Hive, all of those. And when we look around, there's really not much else moving, right? I mean, in the grand scheme of things, a lot of stuff is going to be sideways today because 80% of the market is going to do whatever the S&P is doing. So we can see Riot here had a nice gap up, and it's already started to kind of give back that little rally-based drop image here. So now we've got unfinished business at 1083. If we can get through that, we'll start focusing on the daily pivot point, the weekly pivot point, and the 10-day moving average. None of these look good, or let me rephrase that. Riot does not look good for a swing trade by any stretch of the imagination. This thing is having a rough go, and it has a lot of room to move to the upside before we would even consider it a good swing. Nothing wrong with being early if you're willing to take the monetary risk. Just, keep in mind that you would be taking extra risk in Riot. So we can see Hut mining here. It did get that pop up this morning too. That's a fantastically long, wide TRB. Lots of room for a turnaround. But again, it doesn't look good in the bigger picture. We're just talking about, what's moving today that we might be able to catch a ride on. Intraday trades, short duration stuff, and Hive. So Hive is almost immediately giving it all back, right? Or at least trying to. But when we look at things that are moving today, that's about it, right? Bitcoin proxies. So GBTC, that's a Bitcoin proxy, and BITOs are both Bitcoin products. Behind that, we got nat gas, and that's all, because we need at least 0.5%, and none of these, the rest of these, even get close to that. And then on the negative side, I mean, there's really nothing negative. This IGV very likely is still showing a print from yesterday in the after hours, not this morning in the pre-market. So, you know, that thing is not overly liquid. That's why I'm pretty sure it's not showing us anything useful. Gold miners are down, emerging markets are down. So your precious metals, technology, the FANGs, we can't say semis are down because they're not down enough. So we need more, right? It really just looks like we're giving back yesterday's move, whatever's left of it, and that we're in that hurry up and wait mode. All right, so it's very likely going to be a make or break with Apple today. I mean, in the grand scheme of things, Apple's not going to get broke, right? It's just in too many portfolios. But it could continue to demonstrate weakness, especially if this event doesn't play out well. So levels to the upside of concern is 20 period moving average and the 10 period moving average on a weekly time frame. For the 10, it's the SMA and the EMA, but for the 20, it's just the SMA. There's a quarterly level on Apple that is important, right around that 183. And there's a monthly level at 186.5, but that's kind of getting ahead of ourselves, right? The range is really clear on Apple. It's got to get out of that range. And I would take it at face value that if it breaks to the upside, we're going to try to rebuild these levels back to 190s. And if we break out of that zone to the downside, then we're going to, at the very least, make the entire range to the downside, right? So we would just measure that, and it comes out to about $5. And we would just project that down. So call it 168, 169. It gets us down to that monthly level, 169.85. That's an easy marker. On the weekly, if we think about where that would put us, around the 50-week moving average, which makes perfect sense. So if Apple does break down from this event today, if it's just a big turd and the whole event crashes and burns, then we're looking at 168, a bounce on the 50. And if things go good, then, you know, we're looking at Apple back around $200. Not at the end of the day, obviously, right? We're just talking about how this is going to play out. By the end of the week, 190 or 170. It's a pretty good coin toss. That's not what we're looking for. Yesterday when Thinkorswim is acting up, I closed all the floating charts that I had, thinking maybe I could help speed it up a little bit, but it didn't. It didn't help at all. Nothing helped. So we can see the 10-year here. It's still just like it was yesterday. Nothing's really changed. That's not exactly bad, right? We do need it to go down, don't get me wrong, but it's crazy bullish on the weekly and on the monthly. And I mean, even a little bit on the daily, it's just really bullish. So the fact that it's not doing anything is kind of a good thing. Just let it calm down, quit making these big moves, and just chill, right? It's kind of a slow grind to the downside. If we were to use something like the regression line, we can see that the slope is downward. So it is, gently fading off a little bit, and not making big moves is a really good thing. So let's just continue to focus on that. It needs to back away from those highs, get back below 4%, but we don't want it to make a big, fast, sudden move. So nice and easy, just let it work its way down. It's got, plenty of time. So at the very least, it's doing what we would want it to do, easing off of those highs. US dollar Japan, on the other hand, is starting to freak me out a little bit, because that's a crazy, super narrow range. I mean, that's really, really tight in this kind of channel. So watch for that 147 US dollar Japan. Consider that unfinished business, right? When we get back up into that zone. And it very likely is going to be, you know, some fast moves like we saw back here. If that business is not finished, if we can, still consider unfinished business. Otherwise, getting through it, we'll look to close this gap back here. And we're talking about, 148 really. If we get through that gap, get a little bit of an overshoot. So this is a really big deal. The more it stays compressed like this in that grinding channel, the more nervous I get. I don't like it. All right, so we can see the Dixie still underneath that 105. It's still concerning having it up at that levels, but it also looks bullish on the daily, the weekly, the monthly. And, so the fact that it's still inside of last week's levels is a good thing, but this is on the move and nothing else really is, right? The 10 years not moving, the NASDAQ's not moving, S&P's not moving, but the dollar's moving. So that's concerning. Even US dollar Japan isn't moving. We talked about how it's sitting inside that zone. So we've got, this move in the dollar is a little concerning. We've got that gap that we can look to fill. And we've got crude testing a breakout above that 88. 92 to 95 is the area in focus there. I don't want to say it was Bank of America, because it might not have been then, but it was one of the big ones, right? JP Morgan, Goldman Sachs, Bank of America, one of those came out with that 92, 95 zone by the end of the year. So we're not talking about, getting there in the next 2 days. I think crude and the dollar is going to be something you're going to want to keep your eye on, maybe a little more than the 10-year and US dollar Japan today, if they continue to stay range bound. So I'm not saying completely ignore the 10-year, but if it stays huddled up like that, then I think the dollar is a better choice. The dollar and crude. Yeah, the range in bonds too. So it's what we'd expect, right? So that's what I got for you guys today. It's just going to be a range bound market. And the only thing that's moving around this morning was Bitcoin proxies. And that's, I mean, that's not sustainable for the rest of the market, right? We would need more than that to even consider something else. And while Apple, is big enough to influence markets, I don't think it's like that. One of the things that Apple has is the weight of what they talk about. So when Apple comes out and says things like, we think in the future, the next quarter, we're going to have lowered sales because the economy is slowing down and we see recession coming, that would drop a market, right? Because a lot of people would give that weight and credence. But if Apple just comes out with their phone and it's kind of a dud and people aren't impressed and Apple sells off, well, that isn't the same kind of sell off. And it's very likely not going to take the whole marketplace with it. Right. So hopefully that makes sense. We want to differentiate between those two kind of activities. Just seeing Apple go down by itself is not enough, or up, by the way. It doesn't have to be all doom and gloom. Apple could rip to the upside, not necessarily take the rest of the market with it. So kind of a boring morning briefing because there's just nothing here and we're on a hurry up and wait. But there's safety in that. Knowing when not to trade is a very valuable tool. So everybody, be careful, be safe, have a good day. I will see you all tomorrow.